Excellent. I think we've started at the end of the conversation. Thank you. Thank you for the invitation, and glad to be speaking here to you about the progress of our company. The current management team at ADX has been in place for approximately 2 years, and what we've been focused on over those 2 years is bringing together 3 assets, which I'll talk to you about today. Our strategy has changed from a fairly conventional exploration company, highly reliant on finding new exploration targets and farm-ins, to a company that's become very focused on appraisal and development. In particular, trying to define 3 assets which we think are ripe for appraisal and then development. But to do that, to attract the appropriate investment, defining them both technically and commercially. And I think now as a company we're ready to take that next step, and what we hope to bring to the market over the next 3 to 6 months is a very compelling proposition in terms of investment case for each of these assets. Not just for appraisal, but so people can see line of sight through to development and cash flow. So as a company, we're an ASX listed company, but we operate predominantly in Europe and North Africa, in Tunisia. I think, our key investment proposition is that we have 200 million barrels of 2C. That 2C is across 2 assets, and those assets at different times have been independently assessed. What we've done is take those assessments and we believe further define them both technically and commercially. So what we're looking to do now is target up to 4 appraisal wells over the next 18 months. And we've also tried to bring together multiple pathways for development because we think that's appropriate in the current investment climate. Adding to our own skills, which I'd probably describe predominantly as subsurface, geotechnical and engineering, we've added some what we believe is some compelling partnerships of engineering companies and fabricators, which enable us to find, investment pathways for our resources. So if you look at this graph, it's not something we're particularly proud of at this point in time, but we see our goal very clearly. We're about the second or third cheapest company in terms of resources based on EMV divided by resources. And I've seen that in the past. I've been involved with it in the past. When you have, in our case, 100% of all your assets, you really need to bring your capital in. Once you bring the capital in, that defines value in your asset base. Just focusing on our key assets, this is the Duga gas discovery. It's a gas resource which is probably half liquids, half gas. It's only 43 kilometres from shore. This is the Transmed pipeline, so we're close to infrastructure. We're assessing about half a TCF of gas and about 80 million barrels of liquids. So it's a very compelling resource in a transformed market in Tunisia, where there's a very high appetite for both gas and liquids. The Nilda oil redevelopment project is actually a field that was developed in the 80s by Shell and Eni. We've come back to this, looked at it, and what we realised is what happened in the 80s as the oil price dropped from $40 to $20. It was a first generation FPSO. The oil price dropped. They tried to accelerate production, and they induced water. So that was fairly terminal for the field at that point in time because they had no downhole lift capacity, no water handling, and they ended up shutting it in. We've found reports even in their day where they assessed between 20 to 40 million barrels remaining. We assess around 30 million barrels of remaining resource. And what we've done is work with an industry fabricator to come up with what we believe is a superior development plan to an FPSO, which will significantly reduce our CapEx and provide lower lease costs. But I'll describe a little bit more about that later. The third asset is much more immediate. 2 onshore wells covered by 3D. The historical wells that were drilled in the 80s. No 3D at that point in time, but there were multiple zones that were tested. Now we can evaluate those zones on 3D seismic, and we plan to go back, re-drill those. We're very close to existing gas plants, good gas price, low royalty rates, and they're very, if you like, very quick pathways to cash flow. So look, I just on our portfolio, I think the key attributes are similar to the ones that was suggested by John Morrow yesterday as success factors. We've got assets that we believe are profitable, sub $50 a barrel. In fact, Nilda down to about $25 a barrel. They're all relatively shallow water depths, and they've all had significant advancements from technology, in the case of Nilda, from evolution of gas markets, and also from government policy. So the assets, in terms of their history, Nilda, the oil field, was basically produced at around 10,000 barrels a day for 6 years. So we understood that it's a very productive reservoir. What we've gone in there and basically reassessed the resource, developed a 3D geological model, and used reservoir modelling to forecast forward to come up with a high degree of confidence in terms of remaining reserves. In the case of Duga, what you've got is a very large resource base discovered in the 80s. Unfortunately, the original well was not targeting these deeper reservoirs. It was targeting shallower reservoirs. In a sense, it was badly drilled, very overpressured. They did manage to get a test, however, so we know that we've got gas that's liquids rich, and we also, with the introduction of 3D seismic, know we've got the capacity to go up dip and attract maybe a 600-metre gas column. So it's a very large structure, it's a large resource, and it's relatively close to shore. The technological advancement over the last 10 years, I mean, typically a project like this would have required a platform 10 or 15 years ago. Now it's quite simply a subsea development, 3-phase pipeline, and an onshore gas plant. So we've taken that to the next level. We brought in Technip FMC. They've done a concept study. This was actually something that was insisted on by the Tunisian government, and so that we could demonstrate to them that this is actually an asset that needs to be developed. And what we got out of the Tunisians was a change in our work program, which was previously focused on 3D seismic and exploration, to now being the appraisal of Duga and the productivity testing of Duga, to demonstrate that we have sufficient productivity on a per well basis to be able to go forward with the development. Finally, Parta, onshore Romania, as I said, much smaller, much lower cost, onshore, very rapid pathway to cash flow. These wells will cost about $2 million to drill, but we believe will deliver NPVs somewhere between 10 to 30 million. And basically what we're doing is basically retesting gas that's already been discovered. So relatively low risk, rapid pathway to cash flow. So the combination of all three, we believe, creates quite a good portfolio. We've got, short-term production, onshore Romania. We've got very rapid, low capex per barrel oil at the Nilda redevelopment project, and then long-lived production at Duga, which would be about 18,000 barrels a day of oil equivalent over a period of 20 years. So we are very much, I suppose, as an incubator of assets is probably a good way to describe us. All the assets were generated organically. We prepared an investment case over a period of 2 years, and now we're at a very pivotal point where we can take these assets to market. Having 100% of these assets gives us great flexibility in the sense that we can introduce different kinds of partners, not just the conventional farminees, but also potentially private equity at an asset level, if you also vendor finance, and we're also looking in the case of Nilda, the majority of our facilities have already been offered to us as leases. So that brings our capex down, allows us to leverage other people's balance sheets and significantly reduce capex and increase certainty. So you can see here what we've tried to do is develop a capability beyond our means. Our major focus is very much on subsurface, project execution, commercial, but we've been able to bring in companies like Brian Chang Holdings, Brian Chang's a guy in his 70s. He recently sold the Yenting yard onshore in China for about $500 million. And what he's been doing is focusing on self-installing platforms. There's one already built that's been targeted for Nilda. So we've been working very closely with him in relation to if you like, a development plan for Nilda. We've also introduced a company called Spec Energy. Again, big balance sheet. They're prepared to lease as production facilities originally for Nilda, but now they're also looking at Duga as well. So that if you like, enables us to enhance our core strengths, but also deliver to the market very well-defined development concepts. So in terms of funding, what we've tried to do is structure the company so that we can introduce originally equity at a parent level, but then subsequently also direct equity or vendor finance at a subsidiary level, but then still retain the opportunities of farm-ins and offtake agreements later on. So this is the process we've been through with Nilda. The findings of our recent studies demonstrate to us that there's a very large resource that's left behind in Nilda that wasn't actually produced from the original well. And we believe that there's about 30 million barrels remaining in part of the better reservoir that was never really accessed. And we've got a very high degree of confidence in that. Nilda delivers excellent economics, sub $10 US per barrel capex, and very profitable down to oil prices of sub $30 a barrel in all resource cases. In the case of Duga, it's been a question of taking our 3D seismic and getting the most out of it, understanding the reservoir, looking at analogous reservoirs to Duga that have been produced in Tunisia, also looking at what fractures can do for us, and I guess better defining the resource, but also understanding where we can get the most productivity. So again, our appraisal objectives for Duga are very simple. Go in there, drill, confirm what we believe is a very large gas column, and then test to determine the productivity of the well. And if we can get around 30 million a day, then we're off to the races. In terms of Parta, as I mentioned earlier, re-drill wells, and we'll basically go in there, re-drill the wells, and be able to take them through to production. Thank you.
Thanks very much.